Okay, this is a quick video on trends. Disclaimer before that, trading futures will involve losses. Following video method does not watch for profits. This is just analysis for fun. Don't trade. Please don't trade. Okay. Yeah. To start with, so when we look at the chart, right, this is the chart for last 3 days, that is March 30, 29, 28. And what do you see happening here, right? So the prices are moving up, right? But let's define a structure to this and see what is happening in this. You can see there is one impulsive wave coming higher, and there is one corrective wave, then another impulsive wave, another corrective wave, another impulsive wave, another corrective wave, right? But looking at this doesn't give us more clarity, so let's add one more structure to top of this, right? So nothing but ranges, right? So what happened here? There was one range formed, it broke out, and another range formed, it broke out, another range formed. Now, can we look at one nuance here? That the corrective wave, what I was saying, are acting as ranges, right? This was a corrective wave, this is acting as a range. This was corrective wave, this is acting as a range. This was corrective wave, acting as a range. And this is very prominent when the trend is up. And that's what actually the DP system says. When the prices try to move in a range formation for 70% of the time, and even in the trend, since the trend can't be so strong all the time, the prices move in ranges, and it moves in either impulsive waves and corrective waves. And when the trend is strong, the corrective waves become the ranges, right? And one more nuance that you can see is we try to sorry for that, we try to trade the complex pullback. The range is nothing but a complex pullback. The range is nothing but a complex pullback of the trend. We don't look for a proper, there is a textbook trend won't happen all the time. It is very rare. Only on type 1 trend days you will see a textbook kind of trend which actually moves like a straight line, then come and then moves in a straight line. That doesn't happen. Most of the time market moves in a range, and ranges are nothing but complex pullbacks, right? And that's the reason why since it is a complex pullback, it is more that much more successful. It is more probability wise it is higher to trade ranges, right? Now once we have the waves, impulsive corrective waves defined, and once we have the ranges defined, let's see what the ranges. Let's try to understand the range, right? So range is nothing but what? It's an imbalance. There is an imbalance between the buyers at the extreme of the range. That is, buyers are more dominant here, sellers are more dominant here, and buyers and sellers are in equilibrium at the center. That is nothing but the definition of a range, and that is what happens in the market all the time. Whenever there is a high amount of buyers who are interested at a particular level, the prices touch it and get rejected from there, and the prices go back into the range. And when the sellers are more dominant at a particular level, the prices come back into that range. So we actually feed on this imbalance. Order flow imbalance is what we look out for whenever there is an imbalance at the top or bottom, and we try to trade it, right? Okay. Now, having defined the ranges, let's define a DP that is very obvious. There were other DPs that I have just ignored just to keep the presentation simple. I have just defined one DP here, which was day low. This was a PDH high. And can you just spot the two trades that were available from last 3 days? This was trade 1. This was another trade, right? Obviously, there are other factors. It's just not the blind trade that we take. You need to read the price action and just trying to give the feel of the system on the whole, right? So two trades were quite visible here, and you can actually take, and if your read of the market is quite good, you can actually attempt some counter trend trades here, and maybe here, right? So this is what I was talking about. Trend is on the upside. I look to take all high probability trades for me, or all buy at the range extreme, along with the confluence of a DP, confluence of the DP, right? And what is my counter trend trades? These trends are actually trades that are taken at the DPs but at the counter trend levels, right? So this is how I trade. Now let's go a step further. So having said that, for this system we just look at the ranges and impulsive corrective waves to define our trend. We still use another concept called a micro trend, minor trend, and major trends. This major trend we can ignore for time being, because these I have seen them useful only during type 1 kind of trend day, or when the trend is very strong and it's very obvious. It's so obvious that you can't miss that MSP, right? It hardly comes around once or twice a month or for the time being. So let's focus on micro trend and minor trend, and we'll try to cover the major trend and other nuances in the next video. So let's look at the micro trend. Micro trend is what? Micro trend is actually, if you look at the each 3-minute candle, if the candles are forming a lower high and each candle is actually breaking the lows of the previous candle, that means the micro trend is down. If the candles are forming one above the other, where another successive candle is breaking the high of the other candle, previous candle, we say the micro trend is up. Now, why is it important to understand this concept? Is because once we understand the micro trend, we can understand the minor trend. Minor trend is actually when we combine two micro trends, we get a minor trend. So what is the micro trend? Down here, minor trend is up here. So who is more dominant? Minor trend up is a dominant here, right? So why we actually look at this is, when in order to take the trades, or in order to initiate the trades, we look at the pivots here, which are formed because of micro trends in order to initiate the trade. For example, if you're taking a breakout failure trade and the minor trend is coming like this and you get a breakout failure, we try to initiate the trade at the pivot, right? We try to initiate the breakout failure here, we try to initiate the trade at the pivot, right? So that is the reason we have to understand the micro trend. So let's take an example which happened yesterday. That's on, I think it's on March 30, that is yesterday. So we had two trade opportunities yesterday. That was, one was here and the other one was here. Effectively what was happening was, this was a DP, and let's look at the micro trend when the prices approached the DP. It was down, 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 and it created a micro trend. It changed here, it created a pivot, and it went down. So you can look to take the trade here, right? Or if you are not comfortable with the fall of the market, with the fall, you can just wait to see if it forms another pivot. Another pivot was formed here, right? Micro trend went up, up, up. Clearly micro trend was strong here. Minor trend came here, took the support. You can look to take the trade here. So the other trade that was possible, that was taken yesterday, was at the day low, where the micro trend was clearly down, down, down. Then it formed a micro trend, changed to up. Then it came down. Then based on the feel and the read of the market, everything, we decided to take the trade somewhere near to here, on top of it, right? So somewhere near to here, we took the trade. So this is about micro trend, minor trend, and pivots, that is minor pivots. There is other nuances for this, like the buffer zone and another thing like 2 moves, not to accept more than 2 moves. Such nuances we'll try to cover it in the next video. We'll try to keep the videos no more than 4 to 5 minutes, so that it's easy to digest the concept, and you can apply it straight away on the next day, right? Yeah, thank you.